Okay, recording is now on. Someone asked you, Fan, you asked me to record this video, so I'm recording. Luckily, I haven't said anything too important yet. We have 3 more people coming into the class here. So this will be recorded, so just keep that in mind. If you say anything, chat does not get recorded, but anything you say on voice or if your camera is on, that will get recorded. But I've done a number of these Zoom classes so far, and so far I've yet to have one student turn their camera on, which I'm fine with. And I've actually turned my camera off because if you guys aren't going to have your cameras on, why should I have mine on? Which is fine. I think that's totally okay. So I'm recording this now. You didn't miss much in the first few minutes. What I had said, just to recap quickly, if you click on the class video button, you'll get to the playlist for the class. All the chapters have now been filmed and recorded, and I posted the last few chapters recently. I may have posted the same one twice here. And in here's also, which you probably already watched, about the paper and test 2. Test 2 is done. By and large, everybody did well in test 2. So the big assignment to work on now is the paper, which that's here. Now this is the team assignment. So you guys have access to Zoom as well as I do. So you can coordinate with your team to have your own Zoom meeting just run by the students to help facilitate the completion of the stock paper, which is due on April 14th, which is April 8th today. So hopefully you've gotten started on it. It was originally due a lot sooner, but I had adjusted all the due dates later since we had an extra week off on for spring break. So once you complete the team paper here, and I left a template and a student example. Also, if you go to course documents, I have under, let's see, stock analysis and instructions examples. If you click on that, I have a whole host of other student examples, example database. So there's a whole bunch of examples that you could see on how to complete this assignment. And then after the team stock paper, we have textbook assignment 4, which is going to cover chapters 4, 5, and 6. Then we have the final textbook homework, which is going to cover chapters 1, 2, and 3. And then we have the stock industry spreadsheet. So this is an assignment that I don't think I've talked about before. So keep track of your stock prices. Make this a little bit bigger. Keep track of your stock prices for each company in your industry. Create a weekly performance summary, including total return. Create stock price charts for each stock in the industry. Maybe I went over this with this video. Yeah, I think I did. So it looks like in this video here, I talk about this assignment and I show you how to, in YouTube, how to download the data, put it into Excel, and then make a stock chart. So do this for every stock in one big Excel file. Do this for every stock in your industry. And this is a team assignment. It's due April 29th. It's relatively fun and easy. It's not really that difficult, but it shows you how to download data from Yahoo and create a chart, which I explained in the video. I did the step-by-step in this video to show that before I started going over how to complete the paper. And then before you finish the stock analysis, the second stock analysis team paper, I will have received your first stock analysis team paper, which I would have graded, and then I would have included a lot of feedback on the things you did poorly. I'll give you feedback on how to improve upon, and things that you did well, I'll reinforce. So that way, when you get to the second stock analysis paper, you'll have that down. And again, it's just the same assignment, but you're doing it a second time on a different stock. So think of the first team analysis paper as sort of your first draft or first attempt. Then the second paper is going to be on a different stock, and you basically write the report all over again, but for a different stock. So by the end of this team project, you will have 2 papers completed on 2 different stocks. And these stock analysis paper, you're using a professional format guideline that once you complete the paper, it's something that you could show in a job interview. Since you don't have the experience, it's something that you could talk about or show in a job interview on how you did some stock analysis, how you built a database, and then you did some technical and fundamental analysis and wrote up a stock recommendation report. So it's a good piece, a good tool to have in your portfolio of work. Now, the stock portfolio presentation that we were going to do in class is canceled. So I just gave you the 6 points for this. And this was the presentation you were going to do where you're going to present your stock portfolio in class, talk about the stocks in your portfolio, and talk a little bit about your 2 stock analysis papers. But since we lost a week of class, and because we're not in the physical classroom anymore, I don't really think that this will be too effective through a Zoom conference tool. And I think that you probably use a Zoom conference tool for other classes, and you see kind of how ineffective it is. There's a lot of wasted time. There's not much student contribution or teamwork in this Zoom format. So I don't think it's the greatest learning tool, but it's what we're working with right now. So questions about right now, I'd just like to take some questions for you about the remaining assignments. You could use the chat box to ask some questions. And if you're brave enough, you can use your microphone if you want to ask me a question directly. I'll leave it open for questions. Now remember, today is the 8th, so that only leaves about 6 days to complete this. Hopefully, I mean, already you've done work creating the database, so you have your databases set up and all your data in there. So writing the report, and one thing to remember about the report is you don't have to create references or citations for the report. So it's not required. This is not a typical research paper. This is a stock analysis report. So I don't want you to cut and paste any information from the internet. I want you to develop your own recommendations, your own analysis yourself. So there should be really no need to make quotations. This should be all your own original analysis. I don't care what font size you want. If you want to use font 27, go ahead. It's going to look really silly, but you know, standard paper. That's why sometimes I don't specify font. Use whatever font is appropriate for putting the paper together. In some areas, your font may be smaller. In some areas, your font may be bigger. I'm not really specifically caring too much about font size or about your script, your text format. Just want a report that looks good and has the information in it. Yeah, so the first paper, it will be a little bit more lenient. I don't want like a sloppy mess that you're going to hand in and just hope you're going to do well. So I want you to try your best for the first paper. I think I'm going to grade both papers at a very similar level. So most teams will do much better on the second paper. So the first paper, I'm looking for a decent effort. So don't think of it like an unpolished, unproofread first draft. It's your first attempt, and if there is problems that you're going to have, I'm going to point them out for you to improve upon on the second paper. So I'm expecting that teams won't get perfect scores in the first paper, but they'll have closer to perfect scores on the second paper. Once, you know, so you have all those examples to look at. Now, some of those examples are, you know, a lot more than I'm expecting of you to put together. They're just some of the best examples to show you. I think a problem a lot of teams will have is making the paper look good because your skills in Word may be very poor as far as formatting a document like this, and you may not be familiar with any other tools such as Publisher, Microsoft Publisher, to make a more professional looking report. But hopefully someone on your team has some skills in actually drafting out something other than a Word document. Yes, this Zoom has a weird feature where it puts you in a waiting room, and then I have to admit you to the class. So if you ever wind up in that waiting room, just wait a bit, and then you'll pop into class when I notice that. So right now we have 25 participants, which is good, and you really want to. I have a feeling that most teams have started this team paper already, and that's why I'm doing this. Zoom session. It's not really a class. It's more about giving you an opportunity to ask me directly if you have any confusion or questions about the class that you may want to clear up. So we only have a few assignments left, as far as we have 2 papers, the 2 homeworks, and 1 spreadsheet. And I think most people are happy to find out that the presentation is canceled. And I just straight up gave you the 6 points for that presentation automatically. All right, so let's see here. Yeah. All right. So now you'll also notice that you have this Zoom meeting button here. So you have the Zoom meeting button that you can use as students to log into Zoom and meet in your teams to figure out how you're going to get this work done. So hopefully you have a good plan for that. You know, let's just get, okay. So we're still participating in the Webull assignment. So hopefully, I can't easily bring that up on the computer, but it's because it's a mobile app. And I've been checking that, and students have been trading, and some students have been doing very well. I mean, basically, if you were able to have some money to invest a couple of days ago when we had that 33% decline in the market has rebounded quite nicely since then. So this is a great semester to do a lot of trades because the market is moving so quickly. And there's still probably a lot more volatility left in the market, because what we have coming up is we have earnings season. So we have the first quarter earnings season going to happen. And a lot of companies are going to disappoint in their earnings and their profits, earnings per share, in their guidance moving forward. So we're going to see a lot of companies come out. And just today, Costco came out and said our sales only went up 9%. And investors went, ugh, we're selling the stock 9%. That's it. This is a pandemic, and you haven't sold, 20% more than you're usually selling. So investors were expecting a lot of sales from Costco, but they didn't get the high double-digit percentage sales gains for Costco that they were expecting. And after hours, they pushed the stock lower. So you're going to see that. And then you have some companies come out, like Shake Shack came out and said, yeah, our sales are devastated. We're not making any new stores and things are bad. And then the stock price goes up because the news wasn't as bad as people had expected. So you're going to get a lot of volatility in earnings season. And then after earnings season, we're going to start getting the economic analysis reports in for GDP. We'll get another unemployment report. We'll get more economic indicators, and they'll all be negative. So it'd be interesting to see how the market interprets that. The market is already built in that these indicators will be poor, but if they're worse than expected, that could push the market lower. So any way you slice it, the market is going to be very volatile for the next 6 months in this unprecedented forced recession. This is a forced recession, not a recession due to a business cycle or a recession due to a government interest rate policies or anything like that. This is just basically a shutdown recession, something the world hasn't really seen in 100 years. So with the amount of, so the question really is on most investors, how quickly will the economy go from here back to where it was in the beginning of 2020 or the end of 2019? And I think the answer is it's not going to snap back that quickly. There'll be some pent up demand, but say for example, if you usually go to a restaurant 3 times a week, and for a month you haven't gone to any restaurants, when the restaurants are open up for seating again, it doesn't mean you're going to go 9 times in 1 week. So that money is lost. If you usually get your haircut every 2 weeks, and after 2 months, the barbershops open up, you're not going to get 6 haircuts in 1 day. So there's a lot of information, a lot of sales that are lost forever. So Greg, if you have a question, just ask it in the text box there.
Hey, so I actually jumped on voice chat and
good.
video,
Hi.
so I'll be the first one to do that. I'm just curious what your thoughts are about like the all the money that's getting pumped in through the Fed. If you think that will hurt things in the longer term, or I mean, it just feels like there's been some almost unnatural seeming pumps of the market. I'm curious what your thoughts are about that longer term.
Okay, so I'll answer this question. I see that Diego has his hand risen. I'll take your question next. Yeah, so all that money they're pumping in, right? That's what is going to happen with that. So they're pumping in $1 trillion in, many of you will get $1,200 checks. There's unprecedented lending, almost unheard of lending to small businesses. So all this money is going to get pumped into the economy, but I really don't know what will happen with it, because right now you can pump this money into the economy. However, no one's able to spend anything right now, because you can go grocery shopping in the pharmacy, at least in, we're talking about a good 2/3 of the population of the country, right? So where do you spend this money? So a lot of people will probably save it. So that's not going to help the economy initially. The big worry is, will this cause inflation? And I don't think it necessarily will cause inflation. I think a lot of this money will be used to pay down debt or be saved. I don't think a lot of people are going to run out and make big purchases with this money. I think that it is going to be tempered. The inflationary pressures of this money will be tempered by all the unemployed people and all the people worried about money that don't want to spend right now. So nobody's really buying anything unless it's food or maybe some online stuff, but nobody's making any real big purchases right now. I see a lot of people, the only activity I see are people going to Home Depot and Lowe's and doing home repair. So Home Depot and Lowe's might be interesting stocks in their earnings season, because since they're allowed to be open for a good part of the country and a lot of people have a lot of extra time on their hands, that's an example where the economy will probably do well in the home repair area. So I think there's a couple choice areas of the economy that will do well and their stocks will do well, but those stocks have already gone up in anticipation to that. So let's see what happens with this money. I think it will keep us from going over into a depression, but I don't think it's going to overstimulate the economy. And I think it's actually more is needed. Okay, Diego, you had a question?
Yes, speaking, Professor, my question is about the Weibo trading, paper trading. I recently buy the stocks Luckin Coffee, but it stopped trading the day before yesterday. So do you have any idea? All of my funds were stuck in this single stock.
Yes, so, you're stuck because they stopped trading. They probably will resume trading soon. Now, Luckin Coffee, as you know, they cheated. So they cheated and lied about their sales. So the market reacted swiftly and punishingly to the stock, because once this happens, the investors now are open, the company's now open to investor lawsuits. So this company is done for quite some time, and they must have halted trading on the stock. It could open up again. So now you're saying you have 100% you have no free funds in your account?
No, I still have 70% because they have a trading restrictions. You only can put your 30%
Okay, good.
funds in one single stock.
Now you see why that's important that they have those restrictions. So you can just start trading other stocks, but that stock may open up again in a few days. But that stock was a
Is
huge
it
disappointment.
regulated by the government or it's by the companies?
Well, no, it's the company. It's got to be the exchange that did this.
Oh,
And
got
I
it.
have a feeling that they're halting it so they can get more information of exactly what happened because there's fraud involved here. So eventually, it will open back up.
Oh, got it. Thank you.
Yeah. So you're stuck for a while in that stock,
Yeah.
and you've lost 80% of your money if you went long on that stock.
No,
Interestingly
actually, I
enough, I
shorted.
had a short position on that stock because I had thought that people wouldn't buy coffee because of the lockdown, and then I reversed my short position to zero before the fraud came out. So I missed my opportunity to become first place in the Webull trading app because I had reversed my short too soon.
Oh,
But no one can predict something like this. This is unpredictable because this would be inside information if you knew this. And for, a lot of American companies, this type of shenanigans went on in the early 2000s. So the late 1990s, early 2000s, companies were playing and falsifying their revenues. And then the government slapped them down something hard. And after a real, stock market bottom in 2002, this new, I think it's the Bail-Graham Act, or forgot the exact name. They made some new legislations to prevent companies, make it harder for companies to have fraudulent sales. And I think if China's exchanges are smart, they'll make stricter rules too, so companies can't easily, or a little checked more vigorously, so they don't defraud shareholders. Is what they did here. So it's a very bad thing what this company did, and who knows? Maybe in the long term things will be better for them, but in the short term, they're going to face nothing but lawsuits and additional losses, and banks may not want to deal with them or lend them any money to expand anymore. So we'll see what happens there. But Melissa had a question. She says, I imagine holding for long term is best, but short term we will exercise. You sell short and reinvest, and if so, what do we reinvest in? So I'm not going to tell you specifically what to invest in or reinvest in. A lot of students often try to pump me for information. What stocks should I buy? What mutual fund should I get into? Whether it's for a stock trading competition like it is here or for their real portfolio. And it's a lose-lose proposition for me, because if I do give you a good stock tip and you make money on it, I don't get a commission. And if I do give you a stock tip and you lose money on it, now I get complaints. So I've learned long ago never to give anybody a individual stock tip of what to buy or sell, or I'll talk about stocks, but I'll never recommend buying or selling anything other than, if you're going to buy something, long term is best. Even right now, whatever your stocks that you own look like, I wouldn't worry about it because you have 10, 20, 30, 40 years to have your money in stocks. This will be nothing but a blip. This reminds me similar to in 1998, there was a foreign exchange crisis that had the market go down by 30%. And then that was a V-shaped recovery, and that 30% decline in the markets came right back. Of course, 2 years later, the markets went down 50%. And then 5 years after that, the markets went down another 50%. So there was a lot of volatility from 98 to 2008, that 10-year period, the lost decade. But right now, we're going to have volatility. But if you're invested for the long term, there's no reason to really worry.
I think that the stock market already got a bottom, so it's time to take long position now. Even the cases is over 400,000, but the stock market rise up every day since last week, over 7% every day.
Yes. And this has happened every time in the last 5 bear markets. The market went down significantly, bounced back up, and then went down again. So if you want to look at past history, the past 5 bear markets we had, specifically in 2008, in 2002, in 2000, in 91, in 87, we see this first decline technically in the market, and we went down over 30% in the first decline. Even in a Great Recession, stocks went down. I'll just throw out some numbers. Maybe they went down 20%, and then they went back up 12%, but eventually they wound up down 50%. So don't get too enthusiastic over this bounce back. It looks to me, technically speaking, from a technical analysis side, that this is a typical reaction to a severe downturn in the market. There's an initial technical buy-ins by a lot of people, but it doesn't mean the bottom has been reached. And it's quite possible after earnings reports come out and after economic indicators come out that the market could find a new bottom. Perhaps, the Dow could go down to 16 or back to 18. So not a guarantee. I mean, hopefully stocks go up from here and they don't go back down anymore. But I'm seeing some curious things in the market. I was looking at, hold on a second, I'll show you. Okay, so if you see here, here you're going to see Wingstop, right? So Wingstop's a restaurant that, of course, has wings and, French fries, things like that. So it's a pretty high-flying fast food company, right? So let's look at the past month. So Wingstop, let's look at the last 6 months. So Wingstop peaked about at $98 in the beginning, actually sort of in February. It peaked around $100 a share, which is great, but everything was fine for their restaurants back then. Now we have the panic here of the virus panic that brings the stock down to about $50 a share. So that seems legitimate based on the fact that these restaurants are going to have an extreme slowdown. Now, after only a few days, actually a few weeks, it's back up to $96. So in my opinion, you're telling me that this stock should be valued at the same price before the crisis, even though they're sure to have a slowdown in business based on what's happened. It's not reflected in the stock price. It seems like everybody ran back into this stock. And now a lot of stocks, to me, you can even see here that Yahoo is saying overvalued, has a PE of 139. So to me, it doesn't make sense. Why would this stock, being that it's a restaurant and that would be close to its pre-crisis stock price, it just bounced back so quickly. It's just really amazing. I would never expect it to go. And that's a number of stocks have done that. But when stocks like this, companies like this are sure to face some economic backlash to the current situation, it's surprising how quickly money has flowed back into certain companies. And some companies are, like this one, trading at pre-crisis levels. So it's almost like they're not factoring in the reduction, the high unemployment, the decrease in gross domestic product, and the decrease in people. Because even though they can do takeout, there's still quite a number of people who feel like, I don't want to do takeout because what if they cough in my food? I don't know, right? There's some hesitation there. Restaurants are not as busy as they were. McDonald's was just saying that, their sales are down. For the year-over-year sales are down for February and March.
But what about 2 trillion package approved by the Congress? Do you think that works? Even
Last time Congress handed out money, most people just put it in the bank. They didn't spend it. When
I
George
think,
Bush did that,
maybe they put into the stock market. So that's
it's
why.
possible, but a lot of the people who are getting that money are lower income individuals who are not likely to have a brokerage account or put that money into stock. Most likely, if they're in financial distress, they're going to spend that money on rent and utilities and auto insurance and things like that. If they're not in financial distress, they'll most likely save it. So I don't think that they're going to go and spend $1,200 at Wingstop.
You see, this is kind of what was like the crux of my question originally about the money that's being pumped into the market. Like what I'm seeing in the market, to me at least, doesn't really make sense. Like we went down, but now we're going back up. Meanwhile, no one's working and no one's buying anything or spending any money.
Right.
So like it feels like we're headed for a lower bottom at some point.
Yes. See, the money wasn't pumped into the market. It's scheduled to be pumped into the economy or people's hands. Nobody's gotten this money yet, though. So no one's received it yet. Now, when they receive it, if it was like anything the last time the government directly cut checks to people, most people saved that money the last time rather than spend it because they're worried about why would say you're in this particular and you get $1,200, you're going to think, well, I better save that because I might be unemployed next month. The economy might get worse or, so it's not like people are feeling confident and to consume like they did. And plus everything's closed. But the stock market itself, what's happening with the bounce back is fairly classic. It's happened. I was actually reading an article about this, and you can probably search online. I forgot what the article was, but it was spelling out every big dip we had because of a recession, and that the market initially rebounds and then goes back lower. So yeah, I think, Greg, you're right. There, we have a decent chance of hitting new lows again. I'm not saying it's 100% certain, but there's a decent chance. So even Shake Shack here's Shake Shack, and they, over 6 months, of course, they went down to $32, they're back up to 43, but they came out and said, let's see, I'm trying to look for the news where they, here we go. So in this news, their March sales dropped by 29%. Said same-store sales are down 50 and 90% at company-owned restaurants. So average decline of 70%. So, I mean, that's a huge decline. I mean, average decline of 70%. So of sales, and that's going to go on for a while. So it's really surprising to me that after they made that news, the stock price went up $10 per share.
Yeah.
So it's perplexing to me, but this has happened many times before. And sometimes what people feel is, okay, the stock bottom, stock prices are going up. I don't want to miss out. Let's put my money back in the stock market. Plus that with other good news coming out about stimulus, about the curve, the reduction in the flattening of the curve, and some other good news today. The good news today was that Bernie dropped out of the race, and businesses don't like Bernie, corporations don't like Bernie because they see him as likely to raise corporate tax. And they see Biden is less likely to raise corporate tax. So that gave a bump to the market today. But all these things are very short-term type of indicators that don't really mean anything in the long term. So it's, there are some companies that are still undervalued. They haven't bounced back like these companies have. But I mean, I just feel, I can guarantee it's going to be a volatile market for the next 6 months. Whether or not stock prices are going to be higher than they are today in 6 months or lower, I really couldn't tell you. But I don't worry about it because I'm not looking to do anything with my retirement money in the next 6 months. I don't need it for another 15 years. So in 15 years, my retirement money will probably double or triple. So whatever this little fluctuation is right now is of no concern to me. In fact, I'm not stopping my contributions into the stock market. I'm keeping the same contributions I make every week into the stock market, dollar cost averaging on the way down, on the way up. It's the only way to fully guarantee that you'll have a decent amount of savings in the long term if you do that dollar cost averaging. It's very, very tricky if people get scared and take all their money out of the market, hoping the market's going to go back down and put their money back in. And usually what happens is they take their money out, they never put their money back in. The market starts moving up, and now they're afraid to put their money back in at a higher position than they took it out because they lost money. So that's why trying to time the market or move your money around usually is a fail for most people.
So it sounds like you essentially haven't changed your strategy much. Did you try at all with any percentage of your accounts to like play with shorting the market or playing with
No, I
volatility
don't.
at all?
No, the only thing I did was when the market was panicking and some stocks dropped a huge amount, individual stocks though, I I did buy some stocks I felt were overly punished on the day. There's just one day when the market went down 2,000 points or something like that, and we saw, even a company like Wingstop went down like $15 in that day. I think that's when they hit their low. So a couple of companies were just so severely unjustly punished on that day. I picked up a couple extra shares, but nothing really significant, and I certainly um, didn't like sell any of my mutual funds and any of my retirement accounts. Uh, I didn't fundamentally change my strategy because of this, because I'm confident in the new money going in the market is dollar cost averaging in lower. So I'm getting more shares from my weekly contributions. So there's no need to really inject new money into the market or run out of the market, because that's how long-term you lose money. So it's better it's sort of, and some days I do with the market, like I do with the news, I just take a break from it. I don't look at it for a couple of days because I just can't take all the bad news coming out about it. Because in the long term, when we talk 5 years from today, we're not going to be concerned about this virus situation. It will be solved one way or another. And number two, we're not going to be concerned about the stock market movement because we'll probably be in a different situation that will either be rejoicing for a bull market or crying over a different bear market. So this is going to be quickly forgotten. Today's turmoil in the stock market will be quickly forgotten as new situations occur in the future. I think the biggest thing that's going to affect the stock markets in the future that most people should be worried about is climate change. So I think anything is capable of severely crippling the markets in a long-term pattern would be the manifestation of climate disruption. And that's something that long-term for most people's future is probably a lot more dire of a situation, but because it's so slow moving and no one has been immediately impacted by it, a lot of people are not as worried about it as they should be. Yeah, no, I'm not doing nothing. What I'm doing is continuing my strategy of dollar cost averaging. Although there are some stocks I do like that I felt were completely overvalued. And if the market does go low enough, I will pick up some individual shares of companies that are really solid companies that will get punished if there is another downward turn in the market. So, there are some companies I do like to own that I haven't owned because the prices are so high. But as far as the 401k, I'm already at my max contributions for 401k. Every year I put the maximum amount of money I can into the 401k. So I'm already at the max contributions. Is it wise to increase the 401k contributions during this time? Maybe, maybe not. It's hard to say, because if the market's going to decline for the next 6 months, a lot of that money will just disappear. However, if you do increase your contributions and you keep them increased for a long period of time, then you'll always win out. So I'm a firm believer that if you're going to contribute to your 401k, contribute the max you're allowed to contribute. And if you can do that for a lifetime, there's no way you're going to end up with less money than what you put into those funds. But the big question, everybody, is this going to be a U-shaped recovery or a V-shaped recovery? Basically meaning how long will it take for our economy to be where it was before this crisis? And again, a lot of people are coming out on both sides of this question. Right now, most people are saying it's going to be a little bit longer of a recovery, because you have to remember, the way I look at it, once people are laid off or let go, just because the lockdown is removed doesn't mean the restaurant's going to hire everybody back. Doesn't mean the manufacturing companies or whatever was closed is going to hire everybody back that they laid off. Because when things start up, they're going to start up slow. So they're probably going to only bring back a certain percentage of workers. So that might mean that this unemployment drags on a little bit longer. Because I don't really see any scenario where everyone that was laid off was immediately going to be rehired as soon as the lockdown is over. Because a lot of companies will simply take this as an ability to wait and see if sales increase, business increases, then they'll hire more people. But if not everybody's rehired simultaneously, sales aren't going to pick up. So it's sort of a self-fulfilling prophecy. But luckily for most of you, you're probably more towards the beginning of your career than the end of your career. So you probably don't have too much money in your 401k account yet. So even if, say, you had $100,000 in your 401k account and it went down to $70,000, sure, that hurts, but you have 20 to 30 years, and if you keep that money invested, you'll guaranteed get that 30,000 back, plus much more. And the way I look at it, for the most part, any money you put in stock markets, from what I've seen, usually doubles in 10 years, if not sooner. So if you have 70,000 now, and in 10 years that doubles to 140,000, you're still going to be way ahead than if you take all your money out of the market. So if you can afford it, increasing your 401k contributions is never a bad thing. And increasing it now just means you're going to be buying more shares of stock at a lower price. Okay. Does anybody else have any more questions about the class assignments? There's really not much more I have to say about the economy or the stock market, other than I really don't know exactly what's going to happen, but you may want to do some research into past stock market crashes to see what exactly happens. And you can easily do this on Yahoo Finance. You can go into the Dow or S&P 500, look up a year like 2000 or 2008 where the stock market crashed, and see how far, it is sort of a technical review. How far did the stock market go down before it went back up? So you can do your own technical analysis of, but the problem is things never repeat the way identically. The way what happened last time, last recession is generally not duplicated in the next recession. See if we can do a date range here. Okay, so here is that 2008. This is actually the NASDAQ. You see that decline, this decline in the share price, it pops back up like we're seeing right now and declines again. So having this sort of double bottom is not unusual for a stock market scenario. And basically it took until sort of 2000, oh, actually really went down over here. So you can see here, we had a decline, an increase, decline, increase. But the important thing is to look at these moving averages. And when, you see it's testing the bottom here, when it actually penetrates all three moving averages, including the 200-day, that's when the market really drops. So technically, you may want to do a little research and decide for yourself what's likely to happen. You can see the same thing here in the Dow. The market pulled down, back up, and then once it crosses all three moving averages, then it really tanked. But even then, there's points where it pops up a bit and still continues to go lower. So it's you generally just don't have one direction. You're going to have a few of these hiccups. Okay, any questions about the stock analysis paper? Oh, someone just joined. Just saw them in the waiting room. If I can get them in. So I'll be here for a couple of minutes. So if anybody has any questions, feel free to ask. Either you can ask through your microphone, just go ahead and talk, or you can, if you want, you can use the chat box. I'm going to
Sorry. I know, 100%. And actually, I think John's coming here next week. Is it? I remember you said something yesterday about it. I don't know if you actually.
let's see. You should be able to see your results for exam 1 and exam 2. Let me check. Let me check let's see here. Okay. Submit. Okay. I just set it where you can see exam 1. And you should be able to Exam 2 will be coming up shortly. Exam 2, the test scores were so high in Exam 2 that I was not able to curve Exam 2, and there was no one question that a majority of the class got wrong. So by and large, the average for Exam 2 was a lot better than Exam 1. So Exam 1 I curved because it was a much lower average, but Exam 2, the class average was relatively high, and most people did better in Exam 2 than Exam 1. So there won't be a curve in Exam 2. So you should be able to, you should be able to go into Exam 1 now and see your results. Exam 2, the results will be up soon. I'm just waiting for one student to finish the exam who had a medical reason not to finish. So once they finish, you should be able to see Exam 2 results in a few days. And you should be able to see the whole question. So you can see how this Zoom meeting solution for teaching is sort of a fail because no one really puts their camera on. There's a lot of wasted time and space. And this is why I think most students prefer, well, actually, I'll create a poll. Let's see if it lets me do this. Most students prefer the pre-recorded lectures rather than the synchronous Zoom meetings. So this is really the, I'm not going to schedule too many more of these Zoom meetings unless there's some reason for it, obviously moving forward. But I'm going to end the meeting in about 4 minutes, 8 o'clock. So if anybody has any last minute questions, that would be a good thing to, you can either,
Hi, Professor. I have one more question about stock analysis. So what you really want us to do is about investment summaries. So give the advice like buy, hold, or overhold, or something like that. So we can put.
yes, that's the goal. But to make a recommendation, buy, sell, or hold, you can also do strong buy, but it has to be backed up with the facts and the support in the document. So if your document is basically giving a lot of support to sell the company and you have a buy rating on it, that doesn't make sense. So you need to
So
choose.
we should focus on more on like valuation and financial analysts and technical analysts. We can quickly go over the first part, like the news, the industry overview, and some open source information.
Yes, that's You can do that. Don't cut and paste though. You can paraphrase, but I'm not really even going to grade those parts of the paper too extensively. Most of the weight will be on your financial analysis and your recommendation and your valuation,
Yeah,
because I know
valuation.
everybody could look up in Yahoo or on the internet easily what's the company's profile, what the news is, or what the
Yeah, the basic description, something.
yeah. So I mean, you should do that and do it well, but don't spend most of your time on that, because I'm
Okay,
not going to
got it.
really do anything but look through that quickly. I'm going to go right to the heart of your paper, which is the financial analysis, your financial ratio analysis, your recommendation, your valuation. So that's what I'm going to grade mostly on.
So the last part is about investment risks. Shall we like conduct some mathematical model to analyze risks, or just general talking about some
You
risk?
don't need a mathematical model. That's for sure. For
Oh,
risk.
but so
When we're
just need
talking
some
about risk, you don't need a mathematical.
evidence. Okay.
You basically, like I said in the video, I talked about reading the annual report, and in the annual report, they'll probably have a lot to say about the risks of the company.
Oh, okay.
You know, so a lot of the risks are common sense. Risk, we have strong competitors. Risk, we're going to be affected by the slowdown of the economy. Risk, we have a lot of stores in a country that has strong political
Yeah, competitors.
issues. Yeah. So you don't have to, for risk, you don't really have to create any mathematical models. The mathematical models are all going to be in valuation, and that's going to be tied to probably easiest to use, say, the capital asset pricing model to calculate the required rate of return.
Got it.
But you could also look to all those example papers I gave you to kind of see how they put that together. And I'm not expecting anything very complex on your valuation models. You could do some very simple valuation models, whether it's a dividend discount model, a forward PE model, or a discounted cash flow model. Just simple stuff. I'm not looking for you to be the next Jim Simons and invent a whole new valuation process. This is not quantitative finance master's program. You know, I'm looking for you to have, you know, a basic level, nothing more complex than that's outlined in the textbook.
Okay. Actually, we have other class like a merger and acquisition. We learn some also basic model, like comparative model, comparative evaluation.
Yes, that would be an excellent model to use. So if you want to do comparative valuation, that would be an A+ model. If you wanted to do a discounted cash flow, something else you learn in mergers and acquisitions, that would be fine also. You know, so you can easily use any model you think is appropriate. And I'm not looking for you to generate any new type of models or new type of mathematics.
Yes, just existing model.
Yeah, just existing stuff. And you may have learned it in other finance classes. The book has a few basic models. And again, I'm just looking for consistency. So whatever model you use, that whatever the results are, you talk about that, you analyze it and review the results correctly. You don't, if the model shows you should sell the stock, you shouldn't be telling me how I should be buying the stock. You know what I'm saying? Yes. It's very simple to calculate that. If your model has a share price that's lower than the current share price, that's a buy. If your model generates a share price higher than the current share price, that's a sell.
Yes.
Okay, everybody, stay safe. This is we're going through some, not so great times right now. And hopefully this will all be over soon. And I know it's not ideal to have, I was sort of disappointed that our class went to fully online, because I just was really appreciating the class, because I thought we had a lot of fine students who had a lot of good input and ideas and seemed very eager to learn and happy to be in the classroom. So I do miss being with you guys in the classroom for the remaining class sessions we had. And there was going to be some of the better class sessions. We were going to do a lot more hands-on work in class, as far as you guys working in teams and me reviewing what you were doing and talking, more about the reviewing some of the chapters. But the chapters I was going to review in class anyway, I made new videos and posted them on YouTube. And when I do grade the reports, I will keep in mind that I will grade them a little bit more leniently than I would have graded them if we were going through the course structure as originally laid out. So I think that most of you are doing very well in the class and will continue to do well. So hopefully you're in a situation where you have the time to devote to complete the coursework. We really only have about a month left. So just hang in there, guys. Okay. So good night. Have a good night, guys. And I'll be keeping in touch, and I'll send out reminders here and there of what you should be working on. But right now, the big push is to finish that paper.
Thanks,
See ya,
Professor.
Professor.
Have a good night.
Take care, Greg. I'll see you, Diego.
See ya.
Thanks for the questions, Yufan.
Thank you, Professor. See you.